Okay, all right. So welcome to the live Forex trading session. As usual, we're just going to go through the market, see what's happening in the markets and plan our trading day. So as usual, we're going to start off with the economic calendar, just to see what the market has in store for us today. So today is Wednesday, the 5th of May. Today is Wednesday, the 5th of May. And again, always make sure you're using your own time zone. I'm currently in Rwanda, so I'm using GMT +2. So always make sure you check your time zone. So the times I'll be quoting here are GMT +2 times, Rwanda times, but you set your own economic calendar to your own time. So today is Wednesday, the 5th of May, and the main markets we're looking at are the Euro US dollar and the dollar Canadian dollar. So we're looking for reports that could affect those currency pairs. Number one, we know there are no public holidays today in the UK or the USA. So there are no public holidays today. So let's see about the reports. So you can see these are all reports due out of Asia that have come and gone. So all these reports have been announced already. So we can just go through all that. They've all been announced already. Okay. And then you can see here, we can just ignore all these reports of low importance. We could ignore Spain, Israel, Poland. We could just ignore all of them. This one here at 1 o'clock, GMT +2, the United States mortgage applications. That's one to note because, again, anything to do with the housing market could affect the market. So it won't stop you from trading, but it'd be good to check your trades around that time. And yes, nothing else really. So there's nothing else due out today. So there are no reports of high importance due out today that could affect the Euro US dollar and the dollar Canadian dollar. And there are no public holidays. So basically, you can start trading straight away from the start of the day. Of course, if you're based in the UK or in Nigeria, you can start trading from midnight. And those in Canada, you can start trading when you wake up. Nothing to stop you trading the market straight away. But again, it's always good to check the rest of the week, because today is a sort of day where typically you could have 3 attempts at the market, because there are no reports of high importance due out today. There are no public holidays in the UK or USA. So today is a good day to have 3 attempts at the market. But the question is, should you be having 3 attempts at the market today, despite the fact it's a good day to have 3 attempts at the market because there are no public holidays and no reports of high importance? This is why it's important to check the rest of the week. So we go to the next 7 days. We'll see that tomorrow, Thursday, we have the UK Bank of England interest rate decision. Obviously, UK being the financial capital of the world, that could impact all markets. So there's a chance the markets could trend sideways today. And then tomorrow, we have the big report. Sorry, not tomorrow. On Friday, the 7th of May, we have the big report of the week, which is the US unemployment rate report, or the US non-farm payroll report. So this is a huge report due out of the United States. This report is highly anticipated. It comes out on the first Friday of every month. So the whole global financial markets, everybody knows it's coming out. It's highly anticipated. Everyone knows it's coming out today on Friday, first Friday of the month. And there's a high probability of the markets just trending sideways all week leading up to that report on Friday. So in view of that huge report coming out on Friday, and also the one coming out on Thursday, the Bank of England interest rate decision, today, Wednesday, we're just going to have 1 live attempt at the market. So again, it's taking all factors into consideration. So like I said earlier, despite the fact that there are no public holidays and no reports of high importance, although technically you could have 3 attempts at the market today, but because of the situation for this particular week, we will not be doing that. We'll only be having 1 live attempt at the market today. in view of the reports coming out on Thursday, and most important one on Friday, the US unemployment rate report. Okay, in fact, some people just don't trade at all. Obviously, as a trader, it's always better to err on the side of caution. Again, you don't use the words always or never. The words always or never do not exist in the financial market. So I'm not saying the markets always trend sideways prior to that report on Friday. I'm just saying there's a high probability, maybe 7 out of 10 times the market will trend sideways. So you base your decisions on what usually happens, not what really happens. Anything can happen in the markets at any time for no reason. Okay, so I'm just saying that because of that probability, not certainty, probability, some traders just actually avoid the whole markets that week. So this week in particular, they just avoid trading this week till Friday and just wait till Friday before the trade. But if you do decide to trade like I do, then you only have one attempt a day leading up to Friday. Okay. All right. So don't also forget to check Market Watch to see if there's anything creating uncertainty.
Sorry, excuse me, Dr. Rami.
Yeah.
I have a question. So I know that we usually would look for reports of high importance to sort of inform or guide our trading decision for that particular day. But is there ever a time where we need to look at the medium report, or is there any specific medium reports, I should say, that we should look for that can also assist in guiding? You mentioned the US at 1 p.m., that the housing market.
Yes, but I think in general, what I always advise people to do is, as a beginner, to always read those reports of medium importance. The one for the housing market is just a general one that is an obvious one to advise people on. But yes, it's difficult to tell you about every specific medium report. Okay. So, you know, the other way you can gain experience in which ones to ignore and which ones to keep an eye on is to check what they're about and read about them, and then decide whether it's one to keep an eye on. Basically, reports of medium importance won't stop you trading.
Okay.
So that's the bottom line. It's only the reports of high importance you want to avoid trading prior to that report. Reports of medium importance, if they're just to give you an idea, is okay, could this one possibly affect the market? If they could possibly affect the market, you want to check your trades during that time. And then, but again, some of them you just completely ignore. But again, the ones to ignore, you need to read about them and decide whether you, for example, this one, balance of trade, medium importance, I will ignore that. But if I was trading, in fact, it's a good example now. Of course, if I was trading the Swiss franc, although it's classed as medium, but that's that's an unemployment rate.
Right, correct.
So that one I'm going to be very careful trading prior to that, because it says unemployment rate. So although it's classed as medium, but because it's unemployment rate, you know, that one, you know, obviously is quite important.
Okay.
So yes, you just need to read them and decide whether it's something that could potentially affect that currency pair you're trading, or whether you can ignore it. But that judgment call will be based on each report. And as you can see, every day is so different that it's difficult to give you a list of which ones to ignore, which ones to take note of. But yes, that's a general rule. Housing market, so anything to do with the housing market, mortgage applications, housing stats, anything to do with the housing market, that's a good one to say, okay, I'll check your trades. Of course, things like unemployment, inflation, as you know already, although they might be classed as medium, if it's unemployment, GDP, all those kind of stuff, you want to keep an eye out there. So yes, I think that's the best way to answer that question, is to make that habit of, you know, trying to read about these reports of medium importance, know what they are, and then decide if you think, in view of reading what it's about, whether it's something to note the time and check your trades around that time. Sometimes if the report is not there, if the details of the report is not there, or the summary is not enough, you can, of course, just copy, paste, and Google it.
Yeah. That's what I usually do.
Exactly, yeah. And then find out. So yes, there's some work to be done as a trader to become good.
All right, thank you.
Pleasure. You have to do some investigative work. Okay, so market watch, there's nothing apart from the stock market. Obviously, there's always lots of news to do with the stock market, but in terms of currency trading, there's really nothing causing uncertainty in the global financial markets, specifically affecting the currency market. Okay, so on that note, we can go to the markets and see what's in store. So we'll start with the Euro US dollar, start with the swing trade. So I'll go to the daily time frame. So looking at the daily time frame, the moving average today is 1.1931. So I just adjust. Okay, let me start again. Sorry. So with the moving average, with the Euro US dollar swing trade, this is the daily time frame. I'm currently in a live buy swing trade. You can see where the market broke the moving average there on the 13th of April. Took my swing trade order, and I'm now in a live swing trade. I initially waited for the market to move 100 pips in my direction, which it did on the 19th of April. And at that time, I started to move my stop loss with the moving average. So that's what I just do every day. So today's the moving average is 1.1931. So if I move my stop loss 2 pips below that, that'll be 1929. And you can see I've already done that this morning. I've adjusted that to 1.1929. And then nothing else for me to do. I'll check again tomorrow. Again, actually, this is a good example where we say with swing trading, you need to have patience and discipline. Because with swing trading, once you've decided your entry and your exit points, you need to just stick to it and be disciplined and wait for the market to get to your exit point. So because I use the moving average for my entry and also exit point, I just have to be patient and wait and just keep moving my stop loss with the moving average. So you can see where the market went up there, and then you can see it's starting to fall. Obviously, there's always a temptation to just say, okay, let me jump out and just exit the trade and take some of this profit. Then that's not being disciplined. So you can see swing trading requires a lot of patience and discipline. So I don't care what happens. I'm just going to just keep moving my stop loss with the moving average until the market breaks it and takes me out, wherever that happens and whenever that happens. But like I say, you can see now what we say with swing trading, you need a lot of patience and discipline because there's that temptation to jump out when you see the market falling here. Okay, so that's for the swing trading for the Euro US dollar. We'll now come to the day trading. So that's the 5-minute time frame. So we can see here, this was what was happening in the morning when I started trading. The market was trending sideways between those two white lines. So I had a buy order just above R1 and a sell order just below S1. The pivot point was within the sideways trend. So you can see where the market fell, broke the sideways trend, broke S1, took my sell order with a 20 pips stop loss, 60 pips profit limit. You can see I've been taken out of the trade with a loss of 20 pips. So again, like I said, because of the report coming out on Thursday and Friday, that's the end of trading for today on the Euro US dollar. So because I've been taken out of that trade and lost 20 pips, I've ended trading today on Euro US dollar because I'm only going to have one live attempt, and I've already had the live attempt, which resulted in the 20 pips loss. So I've ended trading on that. Let's go to the USDCAD. So again, we start with the daily time frame for swing trading. So you can see the US CAD is trending down. The moving average 100 today is 1.2600. I'll round that up to 2601. So I'm just going to adjust my pending order to 2 pips above that, which I've already done. So 2 pips above that is 1.2603. with a 100 pip stop loss. So you can see this one is a pending order. I'm not in a live trade yet. I'll just keep moving my pending order with the moving average every day, 2 pips above the moving average till the market reverses, breaks the moving average and takes my order. That could take weeks, that could take months, that could possibly never happen, who knows. Again, with swing trading, this is what we say, you have to have patience and discipline. Okay, so let's go to the 5-minute time frame for day trading. So you can see with the USDCAD, initially this morning the market was trending sideways when I started trading. Sorry, it was trending down. The market was initially trending down when I was trading this morning. So this morning I put my buy order just above the pivot point and a sell order just below S1. And as you can see, my pending orders are still there. And again, I will only be having one live attempt of this market in view of the report coming out on Friday. So if the market falls, takes the sell order, I'll delete the buy order and only have one live attempt. If it takes the buy order first, I will delete the sell and only have one live attempt on this market. But so far, the market hasn't taken either of my pending orders, so I'll leave them in place. And as you can see, it's starting to trend sideways now. It was initially trending down, and it went up, it's coming down, so it's now going up all over the place. But it hasn't broken the pivot or S1 yet. Okay, any questions? Any questions, comments?
Yes, for your day trade, how long have you been in that one, the USCAD?
I'm not in a live trade. They're pending orders.
No, for the day trade, I was just going back to that one. Not the day, sorry. Yeah, the day trade.
Yeah, that's what I'm saying. I'm not in a live day trade on the USCAD.
I think she means
Okay.
swing.
Swing, sorry, not day, sorry, swing. Yeah, thank you, Grace.
With the swing trade too, I'm not in a live trade.
Okay.
With the USDCAD, this is a pending order. I have not, it is the Euro US dollar that I'm in a live trade. So with the Euro US dollar, looking at the daily time frame, you can see where the market broke the moving average here on the 13th of April. So if I put my cursor here where it broke the moving average, you look at the data window, you can see it's the 13th of April on the data window. So I've been in this live swing trade on the Euro US dollar since the 13th of April. But with the USD CAD, it's the pending order. I'm not in a live trade. I'm still just moving my pending order with the moving average. The market, as you can see, the market hasn't reversed and broken the moving average yet.
Okay, thank you.
Pleasure. Yes, it's interesting, like you said, the terminologies. So since you guys are now professional traders, you can see the terminologies are very important. You mentioned day trading. I was thinking of day trading. Any other questions? Okay, good.
That's on my end.
All right, good. So if there are no questions, I wish you all a wonderful day. Enjoy your day, and